Here is how to catch the perfect entry on a lower time frame. So oftentimes when you have a key level in mind, it's hard to get that pinpoint entry. So I'm going to tell you guys exactly what I look for, as well as show you guys a few examples that are playing out in real time with a chart in advance. If you guys are new to the channel, make sure to hit that subscribe button and watch this video until the end if you haven't already. All right, there's a ton of different trading styles, strategies out there on YouTube, but be very cautious of the information that you're receiving, right? Are these people posting setups in advance? Are these guys showing you the trades that they're entering? So let's jump right into it. All right, catching the perfect entry. Now there's multiple different ways to go about it. In this video, I'm going to talk about one or two of the ways that I catch these entries. To start, you always want to make sure price is at a key level, right? Even if you're entering on a 5-minute time frame, which in this case we're going to be doing, you want to make sure price is at a key level. Now, I use support and resistance. There's a ton of smart money, ICT, a ton of different trading methods. What works for me is support and resistance in the form of a zone. Now, I've created the Easy Algo Trading Indicator, which will mark these levels for you with a multi-time frame option. So if you're going to be entering on the 5-minute, you want to use higher time frame support and resistance levels, such as the 1 hour or the 4 hour. And if you have key fib confluence as well, that adds more confidence. Now, my favorite fib levels are the 618 and the 0.65, aka the golden pocket. We also have that integrated with the Easy Algo Trading Indicator. All right, number 2, you're going to go down to the 5-minute time frame for entry. So as price is approaching this key level that you're looking to take a trade, you want to go down to the 5-minute to get that perfect entry. Next, you want to look for a lower high tagging the golden pocket. Using the easy oscillator as confluence, enter your short stop loss above the swing high and the confirmation with a break of structure, in this case to the downside, targeting liquidity. All right, now let's go over it in a real-time setup. So I'll post a setup on the screen here. This is what I posted earlier in the Pro Discord, a setup that I was looking at. So I saw that we had confluence with this 1 hour Easy Algo resistance zone, as well as this 4 hour golden pocket from this swing high to this swing low. So that gives me a ton of confluence that there's going to be some sort of reaction from this level. All right, next what we want to do is go down to the 5-minute time frame for that entry. In this case, it happened extremely quickly. So you can even go down to a lower time frame, such as the 1 minute. So here we have it, right? We have that reversal sell signal right at the top, and then that Easy Algo sell signal as price is going through that golden pocket. So we have a confirmed swing failure pattern of the golden pocket. So ideally, this would be your prime entry. In fact, I'd actually recommend going to the Heiken Ashi candles, using those Easy Algo buy sell signals to take that position. So this would be your optimal entry, right? You can see that the oscillator, right? We use the oscillator for confluence, is in that overbought zone, telling us that price is going to go down. Now, sometimes you want to wait for more confirmation, such as a successful swing fail breaking down this level. Now, most of the time when you see a rejection from a key level, price is not going to continue going down, right? Because there are late shorters who don't enter a short position until right around here, and they're going to put their stop loss somewhere around here. So you don't want to enter with retail on a late entry. Instead, what you want to do is wait for that retest. Now, what I like to do is wait for a retest of the golden pocket, right? So again, the golden pocket are the 0.618 and 0.65 fib level. So I'll draw a fib from that swing high to that swing low and look for a rejection, even down to a 1-minute time frame of that golden pocket. You can see we got a few rejections right here. Just for this example, let's say we entered right around here. We're gonna put our stop loss. You could put it above the swing high. My invalidation level is gonna be before that. So I'll put my stop loss somewhere around here. The oscillator was already in that overbought zone, so we have confluence with the easy oscillator. And this is where you're gonna enter the short position and targeting liquidity. In this case, our first liquidity level is right here. So we can draw a horizontal ray, Alt J. So this is going to be our first take profit. We also have some more liquidity down here for our second take profit, and then you can leave the rest running. Now for confirmation, you want to wait for a break of structure. So on this candle right here, we got a bearish close below this structure. That gives me confidence that I can hold this trade a little bit longer, since we've already failed to hold this level. And now we're most likely going to go down to the next structure low, which is right here. Let me show you guys another example of a recent trade. This was a short position I took the other day. I also posted this ahead of time in the Pro Discord. I'll throw a screenshot up on the screen here. So I was looking at this key level right here, because on a higher time frame, this had been a previous resistance level, right? A previous resistance level. As you can see, we took out these highs, and on a daily time frame, we have this huge supply zone. We have this huge supply zone on the daily time frame, as well as this high. So this was a key level that I was looking for a swing failure pattern. So again, we're going to wait until price approaches that key level. We saw that initial swing failure pattern. We saw that sell signal. But remember, there's always a retest, because retail is going to enter the short position late. So we don't want to get stopped out on the retrace up. Instead, what we want to do is draw that fib once again from the swing high to the swing low. Really, we want to go down to a 1 to 5 minute time frame. And you can see that we rejected from the golden pocket, which would be your short entry. Stop loss right above that zone. And again, you're going to be targeting the liquidity as your first take profit. So as you can see, it's already a 2.5 risk to reward ratio just on the first take profit. So you can get some pretty great entries using the strategy. Also, we had that easy oscillator in the overbought territory. So that is another piece of confluence, right? That's rule number 4. We want to use the oscillator in the overbought and oversold zones as confluence. And the confirmation to keep holding the trade is that break of structure down, right? So on this candle right here, you can see we closed below that structure. So now we'd be targeting the next liquidity level. In this case, the next liquidity level for me would be right around here. Reason being is because this is a bullish order block, right? A bullish order block, you can see we had that bearish candle followed by a strong move up with displacement. So this would be your second take profit. I always recommend taking half of your position at the first take profit and then moving your stop loss to break even. All right, at this point, when price is right around here, price has formed a new liquidity level, right? A new low. So now I'll be looking to take my take profit to at a sweep of these lows. So you're always trading the current price action, and price eventually comes down to hit our TP2. At this point, you can trail your stop loss above this swing high, and your TP3 is going to be the next liquidity level. And we'll let price play out. At this point, I do believe we were finally stopped out in profit after hitting both TP1 and TP2. So that is it for the strategy. This is how you can catch that entry on a lower time frame. As always, have your key levels in mind and wait for that lower high. All right, the reason this works entering at the GP is because you're anticipating a lower high, a shift in market structure to the downside. Now, it won't always come back up and retest that level, but if it does, this is a great strategy. Something else you can do to catch entries on a lower time frame is have that key level in mind and then look for bullish and bearish divergences at a key level. Our divergences in Easy Algo are real time, aka non-repaint, and can be very, very helpful as well to catch entries on a lower time frame. But as always, use key levels on a higher time frame. That's it for this video. If you guys enjoyed, feel free to leave a like, subscribe to the channel for more trading content, and I'll see you guys next video.